Welcome to Markets Now. I'm Michelle Rook with Randy Martinson of Martinson Ag. Mixed closes in both corn and livestock futures trade today, but corn and wheat lower on the grain side with soybeans higher. So Randy, let's talk about corn first. New lows for the move, and it's been kind of an ugly push lower here in the corn market. Is that weather? Is that the lower wheat market? What is weighing on those futures? Because we had some good export and trade news today.
Oh, the demand continues to be extremely strong for corn, so it should be putting some support underneath this market. And we had export sales announced, new ones. So yeah, I mean, you look at the demand side, the idea that USDA should increase exports in the next report, all that should have been friendly. But I think the fact that planting progress continues to be above average or expected to be above average this week is everybody's got ideal planting conditions going on right now. So I think that weighed a little bit on it. I think the lower wheat weighed a little bit on it. But I also think that, it's looking like we're seeing some bear spreading, which tells us that the commercial firms are stepping away and using other products in the short term until new crop becomes available.
And Randy, the dollar was sharply higher on Thursday, which also pressed the market too, right?
Oh, that's a good point. I mean, yeah, I mean, because we're looking at exports and demand for corn to help kind of drive this, and wheat for that matter, with the higher dollar, that certainly did put a little pressure in on both of those markets.
Is the dollar reacting to these trade deals that we saw? We had the announcement of the UK deal on Thursday.
Oh, I think most definitely. I mean, look at it, the dollar was sharply higher, and we're looking at gold dropping a little bit. The stock market was stronger. So it has a little bit better feeling towards the economy. And I think that did help drive the dollar a little bit today.
Overall, though, when you look at the UK deal, there were some carve-outs for ag, but beyond ethanol and beef, was there some disappointment that there weren't other commodities included?
Yeah, there was. I mean, the market was disappointed in the numbers or in the fact or where the trade deal came in. I think most were hoping to see a little bit more corn, a little bit more soybeans or soybean oil, some other products to be involved. But it looks like it is leaning more towards the beef and towards ethanol, and that I think kind of disappointed the market.
We also have the market kind of gearing up for the WASDE coming up on Monday. And in the case of especially corn, maybe even wheat, we are anticipating bigger new crop ending stocks. Is the market already trying to factor that in?
Well, I think for corn, they definitely are. Right now it's a matter of just how will USDA come in and make the adjustments to old crop? Will they increase exports like they should, since our exports are still running about 20%, 25% ahead of last year? So if they make that adjustment, where will stocks be? No matter what, it's going to be a little bit higher, especially if they come in and use a 180 to a 181 for a yield for corn.
But you're looking at over a 2 billion bushel ending stocks figure in that scenario, right?
Exactly. That's the early estimates have it just over 2 billion. I think at best, if it, even if they did cut or increase demand and cut ending stocks for old crop, we'd be looking at maybe a 1.9 would be I think the lowest it would possibly go.
The wheat market, as we said, it's been an anchor for corn and vice versa. The wheat market Stats Canada report was kind of bearish too, wasn't it?
It was. It came in and showed significantly higher stocks than anticipated. So that shows that Canada is going to be a little bit more of a competition for us in the spring wheat market or in the export market for that matter. And that it certainly is going to weigh on the Minneapolis market and also the hard red winter wheat contract here today. Overall, wheat has been struggling. It needs to try to find a little bit of a bottom, but right now it looks like it just keeps searching for those lows.
But that's because we've seen improving conditions, more rain, ideas of rain makes grain, or what?
Well, that is it. I mean, rain makes grain, and right now it's getting to become a little more excessive, and especially in parts of Oklahoma and Texas, even in parts of Kansas, where they're talking about some disease pressure. We see the wheat quality tour start up next week. Maybe we'll see some of that stuff come to light. But the wheat is a little bit of ways away from making it to the bin. But right now, there is no risk premium built into it.
Meanwhile, you had the soybean market, which actually was a little bit higher on Thursday. Was that export or demand news, or is that market getting a push again from the bean oil?
I think it was tied to, of course, the bean oil, I think, helped start it to move higher because of the strong performance in the bean oil. And I think the export sale announcement, 225,000 metric ton to Pakistan, I think that helped to support it. But I also think that the fact that we're not looking at ending stocks increase for soybeans, and that we are getting corn planted, and it's not likely we're going to see acres switch over to soybeans, I think that all has helped to put some underlying support underneath the soybean market.
And you look at the weekly exports, soybeans on their own were actually pretty decent for this time of year, right?
Right. I mean, it's been impressive to see with China out of the market, and with the fact that they've been out for quite a while, our exports for soybeans are still holding up there very well, which means that, we have other buyers coming in and kind of picking up the slack from China.
From a technical standpoint, those soybeans, are we still under these key moving averages?
We are still underneath key moving averages, and most of the markets are struggling on the technical side. We're oversold. We do need to see a correction, but it's just been tough to try to put one together. Overnight, we've been trading with some pretty decent gains, but once the day session starts, we lose them.
Yeah, this is another market we should talk about, the May WASDE, because USDA does say that they are going to use some tariff considerations in the May WASDE. The average trade guesses for new crop ending stocks on soybeans don't look like we have much of a build, but can you have that if you start considering tariffs?
Well, I would expect that we would see a little bit more of a build depending on what they expect to get from a China deal. I mean, right now, that's, I think, going to be the wild card, is what kind of a trade deal can we get with China? How much soybeans will we get them to buy of their needs? And I think that's really going to help dictate it. It's going to be interesting to see how WASDE is going to handle that in this report, because right now, not knowing where the trade deals are falling, it's going to be kind of hard to estimate.
And new contract highs again in live and feeder cattle futures, and again record cash. Hard to believe we can be at these levels.
I actually was expecting that if we could trade up to $300 in the feeder cattle market, which August and Sep did, that we'd see a break. Well, we did see a sell-off, but it just found strength and came roaring right back and closed above it again. So, right now, you're right. There is no sign of a top in this market. Demand continues to be strong. Cash continues to be strong. Cash continues to be at a premium to futures, and it just doesn't look like this animal is quite ready to give it up yet.
Yeah, some record cash again here this week. I think today some 225 to 228 up in the north. Just some crazy prices, and you have seen the same at some of the auctions too, haven't you?
I have. I was watching some today, just cow-calf pairs sell for over $4,700 for a pair. And, that's getting up there where that's some pretty significant dollars to be looking at. And, at this point, you're going to wonder what's going to stop this market. And demand continues to be strong in the U.S. Yeah, is it going to take the consumer pushing back away from the table and looking at other protein sources? I mean, that's what it's probably going to take.
Yeah, so far we haven't seen that. Box beef prices have been very strong.
That's exactly right. And in the prices, I think the average price is somewhere between $7 or $8 for beef right now in the restaurant or in the grocery stores. So we're increasing the price, but yet we're not seeing that demand slow down. And at some point, maybe our economy is doing a little bit better, that the demand will stay.
All right, thanks so much for joining us, Randy Martinson with Martinson Ag, and that is Markets Now.